Hello, everyone, and thank you for joining Cherry Becker's Government and Public Sector podcast. My name is Danny Martinez. I am a partner with Cherry Becker's CFO Advisory Group, focused on state and local government, higher ed, and not-for-profit industries. With me today is my frequent co-presenter, Scott Anderson. Scott, please introduce yourself.
Thanks, Danny. Yeah, Scott Anderson, been with Cherry Bekaert for 20 years. I work on the audit side. I lead our technical efforts with government auditing, as well as serve a number of clients in North Carolina and Virginia.
You are here today because you're going to be listening to part 2 of our GASB update. You should be able to find part 1 where we covered GASB's 102 and 103, where you found this podcast. On this segment, we are going to be covering GASB 104, the 2025 Implementation Guide update, as well as current projects that GASB is working on. GASB 104 is effective for fiscal years 2026, so the June 30, September 30, December 31, 2026 fiscal years. GASB 104's title is Disclosure of Certain Capital Assets. Scott, would you like to jump in and share a little bit about GASB 104?
I always like to talk about the why and what the GASB is trying to do with the standard. While I was at the GASB, I did participate in the pre-agenda research that then turned into this project. In the pre-agenda research, we looked at a lot of different financial reports, trying to figure out how consistently governments were reporting their capital assets. We were looking at assets held for sale. We were looking at their capital asset disclosures. There were a lot of disparity. There was a lot of folks doing things differently. So part of this standard is to make that a little bit more consistent and kind of add more guidance on capital assets held for sale, since that seems to lack a little bit of disclosure. And you can't necessarily tell right now in financial statements when a capital asset is held for sale.
So what is that criteria for capital assets held for sale that GASB 103 is putting out? Sorry,
well,
GASB
first,
104.
Yeah, first I'd point out it's a capital asset held for sale. We are finding that there are some assets that are held for sale that governments consider to be outside of capital assets. That part is not being addressed by the standard. The standard is only focusing on items that are classified as capital assets and when they are being held for sale. And there are a couple of things, a couple of criteria for when an asset is held for sale. The government has decided to pursue the sale, and it is probable, likely to occur, that the sale will be finalized within 1 year of the financial statement date. So probable meaning, greater than 50%. It's intended to be a high threshold that the sale will happen this year.
And when assessing the likelihood of sale, we have a few factors that you can consider. First, the asset is available for immediate sale in its present condition. Second, the status of program to locate a buyer, as it may include a bid, market conditions for selling that type of asset, regulatory approvals needed to sell the asset, and that the evaluation should be made on an annual basis.
Yeah, so this isn't just a shoot from the hip type of thing. It's a serious initiative to sell it. And if you haven't started the initiative, the market is going to be right where you can put it out and sell it fairly quickly. And then that point that you just made, that you have to make that assessment annually. You can't take an asset that's a capital asset and move it in and out of capital assets. But for this case of categorizing it as a held for sale capital asset, it can move in and out of held for sale capital assets. So you need to make that assessment and move it if it's no longer being held for sale or you don't think it'll be sold in the next year. You would no longer classify it that way in your notes.
I could see that tripping people up because I feel like a lot of people have had it drilled into their head that you can't decide if something is a capital asset and then move it out of capital asset and then move it back in. So knowing the specific case in terms of the categorization of the capital asset that it should be assessed, I think is something that is important that you just shared. Anything else? And obviously this is a disclosure standard, but anything else in terms of implementation advice or things you want to share about the disclosure before we move to the implementation guide update?
Yeah, just one thing, which is that if you do have an asset that's held for sale, there are a couple of additional disclosure requirements. One of which is if there's any debt associated with that asset, that needs to be disclosed separately so that a user will know if you do sell it, there's a debt associated with it that may also go away or be paid off with that sale.
Great, thank you. Moving on to the implementation guide update for 2025. Some of the topics covered within that update is cash flows reporting. There's 6 questions on the basic financial statements and management's discussion and analysis. A couple questions on leases. And then other implementation guidance related to 91, 100, 101, and 103. Which of these implementation guide updates would you like to share a little bit more information on?
Well, I want to make a comment first about the implementation guide overall, which is this was a perfect example of what the due process is supposed to do, where the exposure draft provided a few additional Q&As, which when exposed, commenters came back and had issues with some of those questions and answers. And even though the questions and answers maybe had the correct answer, based off of comments, the board decided to pull those out. In some cases, probably won't ever include that Q&A. And in other cases, the decision was made that, well, maybe this is category A gap, not category B gap, and should be part of another project. And so we really saw with this implementation guide update, the board taking comments, feedback, and making changes before it was put out.
So question 13 clarifies the quote unquote ghost column requirement, and I guess it got me to thinking, how is that going? How is the presentation going this year? I know you're in the middle of fiscal year 25 audits. Are you seeing that often, or do people understand what they're doing with the presentation, say when they're moving, say, from a major to non-major fund or vice versa?
Yeah, I think so. I don't think GASB likes that we're calling it the ghost column, but I think sticking that name to it has helped people understand this a little bit better. We saw this a little bit last year. 100 was implemented last year, and so there were some ghost columns last year, and we're seeing some more this year. I think everybody understands it. Not everybody likes to see that column, but at least because it's been put out there and it's been very explicit, no one has a problem with it. I will note that the AICPA has put out a TQA answering the question whether or not a ghost column is an opinion unit and how auditors should approach that in their audit report. So that guidance is out there as well.
Great. Any other questions that you'd like to touch on?
No, the only other thing I'll say is I'm on the AICPA experts panel. We did request more guidance on the subsidy definition from 103, which we talked about in our last podcast. And the GASB has promised that the next year's implementation guide will address more questions about subsidies.
Great. So the last part of this 2-part GASB update is to look at the GASB projects that are currently ongoing. We have 4 for you to choose from, Scott. First one would be subsequent events. Second, everyone's favorite revenue and expense recognition. Third, going concern uncertainties and severe financial stress. And fourth, infrastructure assets. Where would you like to start?
So I can say a lot about probably all of these. Subsequent events is the one that's next. Probably going to be GASB 105. I believe it's on track to be issued the end of this year. So that's one to look out for. And it just provides more enhanced guidance on recognized versus unrecognized events. The board has continued to deliberate on some of the questions or comments from comment letters from the exposure draft, just even in this last board meeting. So that one's the one to look forward to coming out this year.
I'm surprised you didn't pick revenue expense recognition since you were on the panel at the national GFOA discussing this. So any feedback from your presentation that you think is helpful for our audience as this pronouncement kind of continues its way down the path to issuance?
The challenge with this project is refining my comments to just a couple of minutes because there's a lot to it.
Yep.
It's been going since 2018. It probably, I mean, right now the tech plan says it'll be issued by 2027, but I think the project team is not optimistic about that timeline. I think it might go a bit further. But much in line with what the GASB has been trying to do lately, this is intending to be a principles-based approach. So no longer a non-exchange versus an exchange transaction. It's going to be a principles-based approach where whether it's exchange or non-exchange, it's going to go through the same criteria to determine when a revenue or an expense should be recognized. It's all going to come down to legally enforceable claim. It's going to be more nuanced than that. It's going to be a performance obligation approach. And if you've ever read FASB Topic 606, you can understand the nuances involved with that performance obligation approach. And so that's what the GASB is currently going through is how to set that up and what's going to be relevant for governments with the revenue and expenses that governments deal with.
One thing I like to point out for our No New GASBs Ever crowd that we present to or they listen to this podcast sometimes, of these four that we are covering in terms of the GASB projects, we have one, like Scott said, subsequent events that's likely going to come out at the end of this year, but the other three aren't expected till mid to late 2027. So GASB is definitely pacing themselves in terms of the guidance that they're putting out, listening to the needs of their constituents in terms of all of the competing priorities that you all have, while still doing, fulfilling their mission, which is to help improve the financial reporting for governments across the country. Scott,
and just to say something about that, those three projects are what they refer to as comprehensive projects, meaning it's not just an exposure draft and then a final statement. They start with a preliminary views. They have public hearings, they have public forums, they have roundtables, they do a lot of outreach before they even get to an exposure draft. So that's why these projects are going to take forever, is because there's a lot that's going to go into them to make sure that they are resulting in the best answers that both preparers and users will be satisfied with.
So this next one had the preliminary views that was issued in March of this year, going concern, uncertainties, and severe financial stress. Can you share what's happening with this project?
Yeah, what the preliminary views is essentially doing is removing going concern as a concept from governments. Since governments don't go away, the GASB's position is that the term going concern means no longer existing, ceasing to exist. Or I'm sorry, it's the opposite. Going concern means will continue to exist. So when there's no going concern, it's no longer going to exist. And that will create a disconnect from auditing standards. That's the auditors who have expressed views on this have a problem with going away from the going concern term. Instead, the preliminary views is breaking it into two different pieces: probable disillusion and severe financial stress, two different paths for two different issues. And so that will be an interesting one to watch as the GASB tries to navigate those concerns on the audit side.
All right, and the last one is infrastructure assets. We're seeking to address issues related to reporting of infrastructure assets, making them more comparable across governments, more useful to decision makers, more relevant to assessing economic conditions, and to better reflect the capacity of those assets. Any news on where this is going as we head to an exposure draft early next year?
So I believe they've done a preliminary views. They're working through a lot of the feedback. This is a big topic for Joel Black, the GASB chair. What they're trying to do is provide a lot more useful information to users. For general purpose governments, infrastructure assets is their largest capital asset item, but it's presented in the notes as just a single line when there could be a lot of varying degrees of condition on that infrastructure assets. And so providing more guidance, or not guidance, more information about the condition of those infrastructure assets is what that's really going for.
Great. Thank you very much. So as you all think about these 4 projects and think about, they're a little bit down the road, don't really need to implement them yet. Well, what should I be doing as a best practice as a high-performing government to keep track of these? One of the things that we would recommend, at least until we create a Scott Anderson chatbot that you can just plug in and just spit out GASB stuff to you all the time, is to create a GASB pronouncement tracker. We usually build it based off an Excel tool where you have the name of the pronouncement, the topic and what's changing, the effective date, and then the most important piece of that, the person responsible. So who within your government is going to take on that other duties as assigned to keep track of this project. GASB does a great job of putting out the incremental changes from each meeting related to each project on their website. And if you're taking it in those small changes by meeting bites, it's definitely something that is doable. And if you're really wanting the gold star in terms of GASB tracking and being on top of things going on within the profession, would recommend that you all do that. Other plug for GASB, they also make it very easy for you all to provide your comments electronically during the preliminary reviews, the exposure draft phase. Scott also mentioned they have those events where you can go in person and present. I did it back probably 7 years ago. It was terrifying at the time, but it was also a very fulfilling experience. Scott, have you've done that too, those presenting at those hearings?
Oh, I've been on the other side. I think that's how you and I met the first time.
Oh, that's wild. That is a long time ago. But obviously, you have the ability now to express your views through being on the expert panel. So there are ways to get involved, ways to keep track of these things, and you'll also have us. Scott and I and the team here at Cherry Bekaert will be here for you all to provide additional GASB updates, trainings, and all of the types of things that you have come to expect. In terms of what's on the horizon, I shared it in part 1, but just to let you all know again here, GASB 103 is the next project that will get our full focus. I'm talking about templates, webinars, a 4-phase implementation approach. I'm sure we'll do standalone podcasts on it, touching on what you can do with your MD&A, the definition of a subsidy and examples. Those types of things are stuff that we will be working on the end of this year into spring and summer of next year. Well, that concludes our GASB podcast 2-part update. Again, if you have any questions for Scott or I, please email us. My email is danny.martinez@cbh.com. And you can email Scott Anderson at sanderson@cbh.com. If you're an audit client or advisory client, your job bill manager or your service partner are also great resources for you all. Thank you all very much for your time and have a great rest of your day.